Starship blows up while the bottom half gets caught. Planes in danger. Janet Yellen gets hacked. Goolsby flip-flops at the Fed as Waller starts yapping his trap. And what does he tell us about the market? What's going on with the no tax on tips? And are there a few surprises in this legislation? Yes. There's apparently a life-threatening polar vortex coming over the next week. Oops. And dry January creates some problems for alcohol sales, but Bitcoin's up and TikTok might not end up getting banned yet. There's a ton to talk about here, so let's get started on today's Meet Kevin Report, the PM edition. News that makes you money. More cold coffee. Well, welcome back, everyone. Janet Yellen's computer was hacked apparently by Chinese hackers. This is now the second time that the Treasury Department has been hacked. I always wonder if the United States is conducting hacks like this in China. I'm sure we are. And maybe either we're just not getting in or we're so good we just don't get detected. I really hope that's the case, but I don't know how to transition from where I'm going with that line to the FBI just closed down its DEI department in December. So who knows? Maybe the odds of us being able to successfully hack the Chinese with our government officials will go up. I have no idea. But that's what some people are speculating. Anyway, it's kind of sad that our government officials keep getting hacked, given that Donald Trump has been hacked, Kamala Harris has been hacked, Janet Yellen has been hacked. And it seems like we never do anything to actually punish China or Chinese hackers for hacking us. Anywho, somebody who's probably about to get a little slap on the wrist is probably Elon Musk, given the FAA is probably not going to be really happy about the rapid, unscheduled disassembly of the Starship 7. This is not good, but Starship Flight 7 did disassemble. It blew up. All right, everyone, it blew up. These are the pieces of it. Now, remember, this takes off from Boca Chica, Texas. And this blew up, and the debris was flying like a comet, or a series of comets, across the Turks and Caicos.
Are they shooting stars?
This is actually quite beautiful, honestly. It's quite the sight.
What are they?
Now, in fairness, I wouldn't argue that it's quite beautiful if you are at risk of this hitting your plane or landing on your house or something else. So the top half was a failure. And it didn't sound good when SpaceX, in their live stream, they're like, yeah, we've lost contact with the Starship. We don't know where it is, basically. It's like, whoa, okay, wait a minute. Those are things you probably let's just say you'll probably aggro the FAA with those sort of lines. But I will say, the chopstick landing, that gets me every time. That is clutch. Look at that chopstick landing. Here we go. Coming down from 400 kilometers an hour, 180, slowing down. Now 150 kilometers an hour, 120. Here we go. 100, slowing, 70, 60, 50, 40, 30, 20, 10. Look at that. It slows down to like 2 kilometers an hour by the time the arms actually catch it. It's basically hovering by the time the arms catch it. It is so cool. Like, it gives you a lot of, in my opinion, hope and sort of humanity. It's very, very, very exciting, in my opinion. So super excited for SpaceX and where this is going. Not super excited about what's potentially to come from the breakup of this, especially since the pilots who maybe saw the advisory notice that there could be debris in the area of the Caribbean were still there, which I guess is on them, but it does cause some potential risk factors given that, you know, planes were having to, like this NetJets plane was having to, looks like, make a left turn, make a 360, and divert to Miami from where they wanted to go. Oopsie doopsies. But then again, they chose to fly that route through the potential debris field. Some people argue that the debris field was not actually listed as a NOTAM, notice to air missions, before the debris actually started, which it would be bad if that was true. And then we're going to have a larger area of do not fly zones in the future. So the last thing you want is some of this debris hitting a plane and killing a bunch of people. It's just going to set back innovation. It's not good, and we don't want to see stuff like that happening. And again, the quote, "We lost the ship." The FAA is not going to like that one. They want to hear, like, hey, it blew up. We know exactly where it is, and we know what we did wrong, and we'll do better next time. They did say they'll do better next time, but it kind of seemed like they had no idea where it went for a while. That might cause some problems. Rick Scott and Ted Cruz have officially introduced the No Tax on Tips Act. I anticipate that this may be included in Trump's BBB, Big Beautiful Bill. And now what I did think was very interesting in the act is that they specifically exempt taxes on tips for federal income taxes, which does mean in states like California, you're likely still going to be subject to paying your California extortion fee, state tax. And it is possible that states could individually pass laws to also exempt their tips or tips that people collect in those states from taxes, but TBD, that'll be up to individual states. Something that's also interesting is the way that they're setting this up is not actually a way where it's excluded from income, but it's rather a deduction. So I thought that was interesting too. So you declare it from like cash or credit card tips or whatever. You declare it as income, which allows you then to use it to qualify for a home or loans or otherwise. And then you get to write it off and deduct it, which is awesome. So a lot of people don't declare their cash tips because they don't want to pay the taxes on them. But then you can't qualify for loans, so you kind of get screwed. It's that double-edged sword, right? Don't pay taxes, you can't use it to qualify. Well, now you could use it to qualify and not pay taxes. Should that bill pass, I expect it to be part of Trump's big, beautiful bill. Nobody knows. Anyway, I do have a small, brief announcement. March 15th, the Ides of March, we will be holding our Mastermind Group event. This is actually a really exciting time for us, and we've got an amazing group of folks. If you want to join it, it's a group of 7-figure folks, so this is high caliber entrepreneurs, wealthy individuals. If you want to apply to see if you can join this group, go to meetkevin.com, and about halfway down the webpage, you'll see a small section where you can schedule some time to talk with the team and apply to join. So go check that out over at meetkevin.com. The next one is on the Ides of March. The Ides of March.
Who the hell came up with that? I have no idea. It wasn't me. Ha ha ha.
All right. Anyway, the polar vortex is moving in over the next week, apparently with life-threatening cold, negative 45 degrees in some areas, which is crazy. It's all coming from Canada, so thanks, Canadians. Downside is, apparently we won't have enough alcohol to keep us warm. Not that alcohol keeps you warm anyway, it just makes you feel cold or warm as it expands your blood vessels, and you actually end up reducing your body temperature, so it really does the opposite. It's always interesting how things are just so ironic in life. This makes me warm. No, it actually makes you colder. Anyway, apparently, people buy less alcohol during dry December. Dry December. Hello, Kevin. How many have you had today? 0. During dry January, that is. The Federal Reserve Board of St. Louis actually put out a piece on it. I thought it was interesting that they were touching on it, but I may as well show it. Take a look at this. Wholesale sales of alcohol regularly peak every end of the year and into January. A lot of people say this is because people have already stocked up on a lot of alcohol, and this has to do with destocking in January. Other people say it's people having New Year's resolutions not to drink, and then you see this every single year, this sort of seasonal dump in alcohol consumption for wine, spirits, and beer. Kind of interesting to see. Anyway, Bitcoin, apparently there's going to be a crypto ball that will take place Friday, tomorrow, in DC to celebrate Trump's inauguration. Supposedly, it's already sold out, and tickets were going for $2,500. It kind of sounds like a cocktail reception with an open bar and like a selfie taking opportunity. I don't know. It seemed not like, I don't know, something that I don't know if anybody's supposed to be there, anything special is supposed to happen, but it is kind of interesting that they're doing this. They're selling tickets for $2,500 and it's sold out. It just kind of shows you how far Bitcoin has come. We're also, keep in mind, seeing sort of a resurgence just in the last few days of some of the Trump trades. Look at, for example, IWM. It's up from its low about 5 days ago. Look at Bitcoin. 5 days ago, we were trading for around 214 on the Russell 2000 small cap. Now we're at about 224, still well off those highs earlier this year. And then when we look at roughly in about the summer and then again after the election, we look at Bitcoin, we're just over 100,000 right now. And Donald Trump is expected to release an executive order making crypto a, quote, national priority and creating a crypto advisory council. Now, I'm not entirely sure if this is going to have any implications other than the government keeping a strategic Bitcoin reserve or stockpile, which would probably just be, as Donald Trump has said, the seized Bitcoin or crypto that they already have. So whatever they take from criminal activities, I'm not saying that the government is being criminal, although that probably also has some truth. But whatever they take from criminal activities and impound, they anticipate potentially just keeping as opposed to reselling or dumping on the market, which a lot of people are enthused about that because there is some fear that, oh man, what happens if you had like a Biden administration and the last couple, days of his admin just start dumping a bunch of Bitcoin all of a sudden, all at the same time. Well, I've already addressed this and I've said it would create one hell of a buying opportunity because that dip just won't last. Anyway, the order beyond creating a national stockpile would probably also motivate other states to introduce their own statewide stockpile agendas. That wouldn't surprise me, and I think it's actually likely to happen. So stay tuned. All of these initiatives will do very, very well as long as cryptocurrencies continue to hold their value. They will fall apart very rapidly should there be some form of underlying poopsie doopsies in the valuations. So
hopefully that does not happen.
All right. So with that said, let's jump into TikTok.
Yes. TikTok. Biden will not enforce the ban.
So in other words, it's going to be up to Donald Trump, who says he will stay the ban or not enforce the ban himself as long as a buyer is reasonably in the works for TikTok, which means you're probably not going to lose access to TikTok anytime over the next few days, as a lot of people had originally feared. A lot of folks were pretty nervous that, come Sunday, TikTok would basically be gone. Now you don't have to worry about that anymore. Fed Goolsby, a little bit of a flip-flop here. He's been kind of the guy that's been like, hey, look, once the economy slows down the labor market, it's really hard to stop it. It's not like one of those things where the labor market gets worse, and then boop, soft landing, it stops. So he's been of the mindset that how do you actually get it to stop there versus continue on going? And he just came out and said, Meet Kevin has a coupon code for the Trumponomics course at meetkevin.com for the inauguration. That comes with the course member live streams and the trade alerts that are starting in less than 2 weeks for a blitz in February. Oh, okay. Go to meetkevin.com to check that out. You get the Trumponomics course, lifetime access to the course member live streams, and the Trump-related trades that are going to start taking place within about a week of the inauguration. So stay tuned. I'm already prepping my strats. It's going to be fun. We'll do some challenges together. It'll be great. But anyway, no, Fed Goolsby actually says not only is becoming more comfortable that the labor market is stabilizing, but he's heavily looking at these December and November numbers, and he feels pretty good about the economy. He says that, really, this is, how should I phrase this? Let me rephrase this. I've caught myself into a little bit of a hole here. Really, once you get these strong November and December job numbers, you're in a place where you look and go, you know what? these are really good numbers. Now the question is, will that continue in the first quarter? Every single first quarter, we tend to get layoffs from companies. And that includes the layoffs that we saw this morning. You've got BP this morning laying off 5% of its workforce, HSBC expecting to cost restructure. You've got layoffs at JP Morgan, quiet layoffs through mandatory return to work. Microsoft pauses hiring in its consulting unit. All of this week, by the way. Meta cutting 5% of its lowest performing workers. Wayfair cutting 3%. Lineage, the refrigerant company, refrigerator warehouse provider rather, refrigerated warehouse provider, they're cutting jobs. These are just some of the more recent announcements from this week. Now, we tend to get those every year. The problem is just when you have those layoffs, are they coming during a time where the stock market maybe isn't as robust, the jobs market isn't as robust as it was previously to absorb those people who are laid off? So if you get laid off and you get 5 offers for another job, did it really matter? You get to go on to something new and exciting. But if you get laid off and there's nothing else, that's when consumption slows and poopy doopy happens. So we'll see what Goolsby, if Goolsby's initial fears will end up being true, or if he is indeed going to stay more comfortable throughout Q1. Now, Fed Waller does sort of reiterate that, look, the labor market's solid, but it's not booming. So let's not, get carried away here that everything is perfect. In fact, we might have as many as 3 to 4 cuts in 2025 as long as the data cooperates. Fed Waller doesn't believe that Fed tariffs will actually affect inflation as much as people fear. He does say that if inflation moves lower, more rate cuts will come, and inflation like this is very good, and we may even see more cuts in the first half of the year than currently anticipated. This commentary, by the way, moved the odds of a rate cut from September for a full 100% chance of a 25 BP cut all the way up to June 18th. Which is kind of interesting. You've moved up a couple months, actually about 3 months there. You moved up a whole quarter, which is fantastic. Now, what's not fantastic, though, is what Wells Fargo said about Tesla stock and the fact that Microsoft is raising prices and that Apple is down, well, a lot. Apple is down like 4% today. This is actually quite a bit of a hit. So usually you don't see Apple move as much as 4%. That's a really big hit. At the same time, Microsoft is trying to raise prices on its Microsoft Office suite. They're planning on raising prices 30% for the family Office suite, which will raise the price to $130 per year for a family of up to 6, or a 43% price increase for individual plans because of their AI features, which Apple probably wishes that they had. This is because Apple apparently received some reports we're reporting, quote, lackluster iPhone sales in China. Now, we did report on this about a week ago, maybe it was earlier this week, that I think it was actually Monday, that iPhone sales were expected to be down about 4.2 to 5% in the fourth quarter. But apparently some new data is coming out suggesting that we ended up having a substantially lower number of iPhone sales in China, potentially as much as 17% lower than expected in the Chinese market, potentially because of that lackluster movement on AI or what's going on with Siri, nothing, and then obviously competition in China. Okay, so all of this comes after, or I guess around the same time, as Wells Fargo is a mega bear on Tesla. Apparently, Wells Fargo analysts think that Tesla stock will collapse to $125 next year per Wells Fargo. They cite weak fundamentals, struggles to keep deliveries up despite deep discounts. Keep in mind, we talked about Cybertruck discounts this morning, Chinese competition, and the repeal of the $7,500 Inflation Reduction Act tax credit, not just for that $7,500 for consumers, but also potentially the manufacturing tax credits, hurting Tesla's pricing power. Nobody wants a little pee-pee. Okay, so with that said, Wells Fargo also warns that the Optimus and Cybercab are still at too early of a stage to truly drive value today. Now, if you actually look at what people are commenting on these Wells Fargo articles, you usually get things like this. Okay, wait for it. Let's go with, we need a commenter voice. Oh, that's what, we'll use this as the commenter
voice. guess we know who missed the boat. Do we really believe the analysts? $125? That's absurd. Good old Wells Fargo and their fake account fraud. Put down the cracky pipe, Fargo.
This is why it's really bad to say anything bad about somebody else's stock, and it's probably why Hindenburg ended up shutting down. People hate it when you dump on their stock. Let me reiterate that. Don't say anything bad about somebody's stock. The Economist discusses growth in the United States and argues that rising bond yields may be a sign of growth in the U.S. economy, that productivity can potentially keep going, and the extra investments that we're getting from AI investments could end up adding substantially to our GDP, even though many of those investments may end up being money spent for unnecessary investments or failed businesses. They cite the dot-com era as having extra investments into dot-com technology that boosted GDP by as much as 1.5%. That's a lot of money, by the way, when you put it in hundreds of millions of dollars. And even though many of those investments failed, it still ended up propping up GDP before the big oopsie-doopsies. The U.S. market today, per The Economist, reflects the expectation that these investments from companies will be valuable. And on top of that, yields are up because of public debt, the fear of tariffs, the fear of deportation potential, and this strong investment economy. So, if some of these factors start falling away, we could see yields come down substantially. Debt fear is probably not going anywhere anytime soon. The deportation and tariff fear probably aren't that big of a deal. We'll see. And then, of course, we'll end up seeing what happens with AI investments. We know that NVIDIA is having some real problems and glitchiness with their Blackwell chips, leading some companies to prefer the H200s or not buy rack systems at all and just straight up prefer buying the chips themselves to implement however they would like. Regarding hedging and what we see in market trades, Mandy from the CBOE via CNBC on TV today mentioned that people have been buying puts on TLT up until now. That is, people have been using puts on TLT as a way to hedge their portfolios, and now that has switched to call buying. Is this potentially and finally the top for yields? Well, I'll let you know what my trades are in the Trumponomics course. Make sure you're part of it. Use that coupon code. We've got the inauguration code. We're just starting it live now, but that'll expire on inauguration day at the end of the day. When it comes to hedging, you've got a little demand for hedging on big tech before earnings. We've got some big earnings coming up on January 29th, including Microsoft, Tesla, and Meta. You've also got 4 days in a row now of more than 200 advancers in the S&P 500 versus decliners. This has only happened 12 times since 1997. So some bullishness coming back, especially after that PPI and CPI is set. Now, Citi Group is also expected to eliminate more jobs. That's the one I was looking for earlier when I was like, oh, who is the other one? It's Citi Group. They're looking to reduce jobs by as much as 20,000 by the end of 2026, which would be a cut of about 8.7% of their workforce. Ouch. On top of that, we have Hershey stock now hitting its lowest level since March of 2021. So with that said, we are on to the dad joke. All right, here we go. Okay, so dad joke, wrote it down over here. And dad joke, okay. Down, man. Okay, we did that one. Man, some of those are bad. All right, here we go. I recently found out from my insurance company, if my blanket is stolen in the middle of the night, I'm not covered. Okay, now when it comes to the daily wealth. Ah, yes, the daily wealth. So when it comes to the daily wealth, something that I have found to be very, very useful is every single day, ask yourself, what can you do to make your life slightly more efficient? Because it's not the time that those little efficiencies or inefficiencies take. It's the frustration factor and what it does to your attitude. So for example, I know without looking that right here, there it is, there's my wallet. And every time I come back in, I put it in the same spot. And right next to my wallet, I always put 2 chargers. And I like to check these every time I go out to make sure they're full. Okay, that one's at 100%, that one's at 99%. That's pretty decent. Yeah, 100%. So this is useful, right? This is good pre-planning. So that way, when I gotta leave the house in a hurry, I'm not, oh my gosh, where's my wallet? Because that increases frustration exponentially. Having a dead phone increases frustration exponentially. So now, if I look at my phone and it's nearly dead, I take 2 chargers. One to get it back to life, and one I run out of that charge. Or ideally, my phone is fully charged, and then I just take 1. That's the most ideal case. Quite frankly, if it's like noon and your devices are out of battery, you should be asking yourself, what is wrong with me? What can I do to go find another charger and just plug my stuff in every day? Your products, everything that needs to be charged should not be running out of battery. Anytime something runs out of battery, you should ask yourself, how can I make this more efficient? Because every time I run out of battery, that is a failure on my part. It is a lack of planning and it is a failure. And when you start cleaning up these little inefficiencies, you'll actually realize your life gets a lot smoother and less stressful. For example, I use a little stream deck now to kind of change scenes. So and I'm still working this, obviously, in rebuilding the studio. It's been very stressful. But, if I'm gonna jump over to an article over here, I've got a nice little center camera now. I'm working on getting the left camera up. I wanna go back to me and I've removed the border. This is great because everybody complained about the border. I can do that. It's all one click of a button. But if I wanna pause the recording or go to some other scenes, I have to page over because I only have 8 buttons to play with on my regular stream deck. That's not as ideal. So what did I do today? Actually, it was last night and it was overnight delivery. I ordered one of those larger stream decky things. I'm working on setting this up after I post this video. And then that way I won't have to go to different pages. I can see all of my scenes right here. That also goes with obviously working in my,
high tech.
All right, there you have it. Thank you so much for watching. Goodbye, good luck, and please leave me a comment down below to let me know what you think about the AM and PM broadcast. Thanks, folks. We'll see you. Bye.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.